There we go, finally. All right. My broadcast software logged me out of this thing, and we're playing ads for a second. All right. Sorry, everybody, it took me a minute. We are in front of a live conference room audience, and welcome to the show. It took me a minute. My broadcast software logged me out, so that was kind of a bummer, but now I'm back in. So without further ado, we can get to the show. Thanks for being here. Like I said, this is a different thing. I'm not at my normal studio and doing my normal thing, so bear with me today. The list is shorter, so thank goodness. We'll get through this, and yeah, so thanks for coming. Thanks for being here, as always. PPI out this morning to kind of a lackluster reaction in the market, I guess. Looks like we've made chop. Unfortunately, we may just keep chopping right through next week when we do FOMC. So all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I predict it doesn't mean it'll come true. This presentation intended to be informational, educational, fun, entertaining. Hopefully you're entertained. That's why everybody came. And it's not a recommendation to be buying or selling any stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, hire and consult a financial advisor, which is not me. I'm just a guy here on YouTube just showing you some stuff. Maybe we get lucky, maybe we don't. That's the way trading goes. All right. PPI out this morning. Came in light. That was kind of what I figured after we saw the CPI yesterday come in light, that we would see PPI also come in light because oil prices down, and airline stuff down, producer prices down. So this trend may continue for the next couple months. If producer prices are down, that usually leads about, as I was saying yesterday, 6 to 12 weeks before it shows up in the CPI. So, I mean, we may get continued inflation reduction, although tariffs, I don't know. I was gonna do like a masterclass on tariffs today, but maybe I'll wait till I'm back in my studio on Monday and do that. You can let me know in the chat if that's something you're interested in, actually how tariffs work. I know what everybody says on the news and everybody says out there, but when you take international economics, it's got a whole different twist to it, like a college class in international economics. I can explain that next week if everybody's interested in that, like how tariffs actually work for producers, for importers, for everybody. I can just go through it, kind of break it down. And it looks like a lot of people are interested in that, so I can go through it next week and just really explain what it really means. And so do you see a lot of people thinking that's good, so we'll do that next week when I'm back in my office and I can, take a deep breath. I've been nonstop setting up equipment since I got here like almost an hour ago. All right, so we'll talk about that next week on Monday probably, maybe Tuesday. You may have to remind me. And so, all right. And as far as tomorrow goes, Friday, after the market opens, we've got the consumer sentiment from University of Michigan down here. We've got some inflation expectations. Is that in line with the government's numbers? Is it not? We'll kind of get a read on that tomorrow after the market opens. But there's not really any economic news here. Now, the big caution I've been saying all week is that they bumped off retail sales to next Monday. That's weird. Like, why did they do that? I don't know. I don't have a guess, except that maybe they've got some negative numbers they're going to drop on us. So that's, not great, but as the market's already beat down, what's the reaction? Do we actually rally on bad news? I mean, we've done that plenty of times in the past if you've been trading for a while. We get bad news, and then the market explodes higher, and you're like, what happened? So be careful out there, as always, permacautious, and we'll see, where we get to with all this. All right? Stay with us, bear with us. We'll keep coming back. We'll, I'll be here next week. I'll be here tomorrow. I'll be here every day, 9:15. At least I try to be at 9:15. Sometimes technology happens, and I'm a few minutes late. So I do apologize for anybody that, this is late for you. Now, like I said, we've got kind of a dud this morning as we dive down. Let's actually look at the charts, see what we got. Overnight action, not particularly spicy. Just kind of dead, consolidating. We had that big range yesterday. We popped on the CPI, then we seemed like we were going to go lower low, and then we just doing the watermelon seed squeeze thing. Lower highs, higher lows, frustrating everybody, right? Now, for those of you in the room, we'll talk about this later, but when we get this kind of move where it's higher lows, lower highs, that's basically what they call a triangle. And triangles are B waves 90% of the time. So some way, some fashion, somehow we're in some sort of B wave, and we might be dropping out. I'm going to mute this site so it quits throwing up alerts, hopefully. Probably keep throwing up alerts, but hopefully quit dinging on the computer. So a B wave, that means we went into it somehow in an A wave, which maybe that was the A wave. B wave consolidation here, and A, B, C, D, E. If you're watching the ad, that popped up on my other computer. Trying to kind of monitor both things here. And so you have in a triangle A, B, C, D, E. It's a 5-wave thing, but it's not impulsive. It's very overlapping. And as we said, watermelon seed squeezy. So it depends. It's very difficult to determine. Did we come into it with the A up or the A down? Not sure. That makes it very ambiguous. It's like, that's why I call it a watermelon seed squeeze. Like, when you squeeze that watermelon seed, it's all slimy, and it pops, and you don't know if it's going that way or that way or that way or that way. And, or we just hang out and keep going sideways through FOMC. We don't know. So, got to stay on our toes as far as this price action didn't really do much for us overnight. Bummer. I was hoping for some clarity coming into today. We're not getting it. So, moving on. Other things that got interesting here. S5TW. You remember what I said it was going to do? Anybody? Drop back to the bottom. Guess what we did yesterday? Guess where we got to yesterday? Right down to the bottom. Closed yesterday at 18. That's pretty good. S5FI. Look at this one, getting really close to back to 20. Conditions are getting ripe for a reversal here. Conditions are getting ripe. Now, S5 TW, the stock's above the 20-day for the S&P. Sometimes we just spike the top or the bottom. It doesn't have to hang out here long. It could hang out here a few days. It could hang out through here, down at the bottom through FOMC before we reverse. So it's, this tells us, though, that conditions are starting to be ripe for a strong reversal and take us back to the top on stocks above their 20-day moving average. S5FI, doing the double dip thing. We talked about that all the way back in December when we got down there the first time, that we might rally up and then we might dip back down. That's kind of what we're doing, dipping back down. It's common when we look back in here in the history that before we go shooting off to the top, we hang out the bottom, we do a run up, we do a dip, higher low, and then we rip it to the top. We didn't make it to the top this time, at least not so far, since we've been down at the bottom coming into the year, rallied up in the 50s, 60, and then we're down back in the 20s. We could go back below 20. It's entirely possible. Doesn't have to go anywhere, all right? Excuse me. This indication, though, that conditions are, again, ripe for making a bottom in the market. When we look at the S5TH, we broke firmly below the trend line. Now, I'm not looking forward to sitting in this waiting for the next however long till this actually bottoms at 20, but it's possible that this goes all the way down to 20 before the market bottoms out. So this is one to keep an eye on. I've said that ever since we topped way back over here and started grinding down, then we may take this one all the way to the bottom before we get a strong market reversal. So this is like our, if you think about it like a dashboard, gauges, gauge cluster in a car, unless you're in a new car, like ones that had gauges. We kind of read, what do we expect? Short term, we got conditions to bounce. Midterm, that's your stocks above the 50-day, conditions to bounce. Longer term, still got that conditions to further decline. So, but the midterm could bounce from here. We've bounced from here before. I mean, look right here. But we hadn't hit the top at that point. So, entirely possible that we get a bounce, we take it all the way back up, top this thing out above 90 on stocks above the 200-day. This kind of fits with what I was saying, that we may experience a rally into the summer. That fits with everything. Everything's kind of lining up. That whenever we make this bottom, wherever it is, that we may be able to rally. Now, let's talk about what we actually might expect, how we actually might make some money here. The S&P. If we look at the low from back here in August, when the yen trade kind of blowing out, all that sort of stuff, then we take the high that occurred up here just recently in February, almost a month ago, and we look at where we're at right now. The 618 retrace hanging out right around 5,500, just right around there. So if we get further decline, actually tag that 618, that could be the bottom. So we might be messing around here with 87, 84, 85, whatever, 80 points, it's dancing around. 80 points of slush before we reach down, touch that 618 level, and actually make a bottom. So that's kind of what we're looking at right now in the market. That's kind of, as I look at this yesterday and what happened and the way that we kind of did a three-wave rally up into the CPI thing, and then we've kind of retraced and we've made lower highs, kind of sitting there at the 5-minute roadmap line on the S&P. It looks like it wants to just reach down and touch that 618, right? I mean, be a shame to come all this way down from the high last month and just not hit it. So watch out for that. That's kind of my warning, that we may see a little bit more downside. We may just mess around here through the FOMC and then tag that 618 and then rally. Now, do we have to rally? No. If we start getting down well below 5,500, we might be heading on down to the 3-day roadmap line. And that would be kind of a not awesome thing, but it's entirely possible. That 3-day, as a reminder, down around 5,300, 5,250 to 5,350, somewhere in that zone. And then if that doesn't hold, if we go all the way down there and that doesn't hold, we still have the weekly below that we can go visit. And that's down right at 5,000. So not looking forward to that if we just plummet out. The market doesn't usually just make a big plummet, unless, even during COVID, we didn't make just a big plummet. We actually had several days of bounce, significant bounce. And when you look at this right now, we're just bleeding off. There's no bounce so far. So conditions are ripe, even if we're going on down, that we get a large 50 to 618 retrace of this move we've done so far. And bouncing at the 618 zone is pretty likely at this point. And that could take us back up to right around 5,900. All right? So that's kind of like what I'm watching in the coming days, coming through next week at this point. It's hard to look out past FOMC at this point for me until we get some clarity on that. What reaction we get from that. I think conditions are ripe for bouncing as we start, pros and cons. I go through them, like S5TW, ripe for a bounce. S5FI, ripe for a bounce. S5TH, kind of ripe for a bounce. Everything's kind of coming into alignment. And then we look at the S&P's pulled back to the 618, another ripe for a bounce. We're at support. We gap filled on ES, the gap we left from September. So like all these pros to going up are stacking up. What are the pros for further decline? Well, a lot of uncertainty in the market, right? Another pro for bouncing. Fear and greed index kind of bottomed out. I'd like to see it dip to 10, but it doesn't have to. We're in the zone where we've been in extreme greed or extreme fear for days and days. That's ripe for a big bounce in the market. So when you look at all these things, the evidence suggests that maybe we get a bounce. If we can break through that zone, possibly we go on up, hit that possibly 6,600. For those of you that have been with me for a while now, back in 2022 when we were at when everything was looking pretty bad, and I happened to say, hey, I think we're going to bottom here as we come in October, and we did. I said the upside potential is all the way up at 6,600. You may remember that? I mean, and we were down, just to rewind here, just to refresh everybody's memory, when I said that, we were down here. We were down in the 3,000s. And several of you like, really? You expect that big a rally? And lots of naysayers like, no way, you understand the market's like melting down. Like, we've got the rates raising at the fastest pace in history still. And I was like, I think we're about to bottom. And then, I'm thinking that we could go all the way up to 6,600. And we've come all this way and stopped at 6,100. And again, just like we've retraced to the 618, I think it would be, we came all this way. It'd be a shame not to hit that ideal target on the upside. Now, I still, for those of you who've been listening to me, a shorter duration, you've heard me say below 4,000 before we go above 7. That's still part of it. Like we can go up, hit 6,600, make a top there in that vicinity, and then still go below 4,000. Like that's kind of the path I expect us to take over the coming months, possibly into next year, possibly take us a lot longer than that. So this is not a fast outlook. This is just a big picture. What do I plan? So we've got this high here, we've got this low here, we've got a potential high on up here. When I zoom it out and look at where I've placed these 1, 2, 3, 4, 5, the potential for that rally on up there. And this 3 probably did top out where we topped out back in February. This 4 probably bottoming out where we're bottoming out now, but that leaves that 5 potential to do that 5 up into that 6,600 area. All right, it's kind of crazy when you think about it, that had the forethought and vision that we might do this 3-year rally, but it's all part of what I do. It's all part of the analysis. It's all part of digging in the charts, making the prediction, trying to figure out how far we can go on the next move. The next move, after we top out this move, down below 4,000, potentially as deep as 2,000, could even dip slightly below that. So this could be a big correction. This could be as I've heard this thrown around a lot, a generational buying opportunity when we get near the bottom. And some of us may or may not be here to see the next high, however long that takes to get back up here. So, it's just the reality of people, right? Like some of us will be here, some of us won't, some new faces will be here. So, thank you, everybody. Make sure you're subscribed. Keep coming back. We'll be here doing this. I love doing this stuff, and we'll keep at it. I'll be here through the whole thing, and hopefully back to the new highs whenever that occurs. All right. How do we make money today, right? Great, JT. That's a bummer. Outline, and then we might be in a 10, 20-year correction. Yeah, it's a bummer. But how do we make money today? Let's keep going through it. So NQ, potentially finding support at that 618. ES just lagging just a little bit behind. We need to tag it. Potentially bottom there at that 618. That's good. Russell, different path. Totally different path. We already broke down. We've done a big 3-wave retrace. I kind of expect this is an A wave of some sort at this point as part of the bigger correction. And we'll see this potentially rally up to this zone around 2,300 on Russell. If you're an IWM trader, that's somewhere around like 229, 228. You'd have to figure out how much it's lagging. And when you take a zero off, it's not going to be exactly 230. It's slightly behind. And then we'll probably go down from there. So when ES and NQ top out, Russell will probably make a lower high. Oil, still churning around here. Yesterday we had big draws in distillates. We saw a little bit of rally, but again, the uptrend to lows, we're still below it. This is a big red caution that we might see further downside. Think about it, the breakdown pattern. I've shown this off lots of times. We've got an uptrend to lows, we break down through it, we come back test it from the bottom, further decline. My classic one to show off right now is nail. Right there. Broke down below that uptrend to lows. It was a long-term one. Came up, back tested it right there. And we're not even finished finding the bottom yet in that leveraged home builders. So these things work on all the different charts. Gold pushing up. Did our gold trade work out yet? Hopefully this will go on up and hit the target for gold. For Gold Rush traders, hopefully we get that 50% target. And this looks like, we're kind of busting through the 786. So this looks like we're going to push it on up to that 2992, possibly even 3000 area. That looks highly likely for the next move here. And this could get extra spicy. We could see this move on up into the 3050 area even. So despite the fact that I've thought it would look better with a deeper correction in gold, seems to be proving that we're going to go on higher. I like it. I mean, silver even kind of confirming that we're probably going to go on higher. I don't have a big position in silver right now. I was hoping for the lower prices, but once it convinces me we're going to actually break out in silver, I'm going to add a position and ride it, because the upside is, what's a few bucks on the downside when the upside potential is all the way up here, new highs, crazy numbers, 55, possibly 60 an ounce on silver, which right now we're sitting at 33. So this may be possibly one of the biggest opportunities this year in silver, possibly heading into next year or the year after. But that's where I see one of the biggest opportunities in the entire market, all the markets that I watch, is in that silver. But I'm waiting for the best opportunity to put my money back at risk. Maybe I missed it. Maybe I'm too late. But I want the market to prove it to me. I didn't really want to ride a trip back down into the mid-20s with my exposure that I had. So I'm going to let the market prove it to me that we're actually going to move on out. Right now the price action has been choppy and overlapping, so I'm going to let this prove it on out for me. Looking at Bitcoin, stuck at the roadmap line, still. This is not great. The longer we sit here, the higher the odds are that we're going to make another lower low before we can break through the roadmap line. I like to see it just pop right back up through, not stop. Sitting here for 4 days, this is really not making me feel great about continuation higher right now. Just not sure. Not sure. As we talked about last night at the welcome dinner, it was like, if Bitcoin will ever get out of the poorhouse, we'll all be all right. But, it's just sitting here waiting for the correction to be over. At this point, like I said, the longer we sit here at this daily roadmap line, the higher the likelihood we're going to get one more lower low. Bummer. Ethereum continues to be sucking it up. We get below that 1600 area, as I've said for several days now. Triple digits keeps becoming more and more likely. Your next kind of tell is when and if we go below 1600. We're probably going to go triple digits. Triple digits is 999, all right? I'm not trying to fluff it up here. 999 is triple digits. Ideally, if we're going to go that low, we'd go on down to 500 or 600, but we can bottom out just below 1,000, and that could be the bottom of Ethereum. So don't think that we have to go all the way down to ridiculous levels. The ideal level, when you zoom out, look at the big picture pattern that it's set up, the ideal level will be down there around 300 to 600, but anything lower than that low we made back there in July 22 before it went proof of stake. Anything lower than that low can satisfy the condition, which is triple digits. All right. NKD, back testing the uptrend of lows that I drew on there. Now this uptrend of lows is not the best. It only connects a few lows. The lows in here were not very conducive to drawing a great trend line, so kind of be careful. This could reverse quickly, go back higher. It doesn't have to be a bottom here. Global liquidity-wise, though, shows us we're ripe for another pop. Dollar hanging out right here at the 618 retrace. Kind of as I expected, I drew an orange box there, suggesting we might find some support. Might hang out there a few days. Continuation lower is still what I expect. But after we got to this 618, a bounce back up to the roadmap line would not be unexpected. So if you're playing any FX stuff, we might see, Euro USD went pretty far, pretty fast. Coming back to that roadmap line, funny enough, kind of matches with the dollar. We might see that come back before we can bounce again. So be careful getting too aggressive on currencies. We might see a temporary reversal there. All right, what was moving today? I go pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list. Not a super long list today, but let's look for some opportunities. And FN here, let's see, need to clear up the charts. We made that higher high, down to the lowest low. We've got this 618 zone right in here. And if we get above that, 295 on the upside. That's a pretty nice one. You can take that on the close above the roadmap line aggressively. Just watch out, make sure we get through that high right there. Your stop's gonna have to be all the way down here, around 170, 180, somewhere in there. At least $1 below the low. And that's what we got cooking right there on FN. Not a bad chart. That's pretty fair looking. Leveraged Intel, the next thing up here. Let's find the Intel chart. Always go to the underlying and check this out. Back to the roadmap line. So yeah, this actually made a higher low, barely. And this could turn and break out. We're sitting right at that 618 level, and that all lining up right at the roadmap line there. Significant resistance to get through, and that's what we're seeing with the price action so far today in the limited 20 minutes we've been open. If we can push that on up through, get that close above that last little, if you look at it, that candle right there from 10 days ago, if we get a close above that candle right there, that's probably a good signal that we're going on up into the 28, possibly 30, maybe even 32 area on Intel. Could be a pretty fair opportunity if that's your kind of trade right there. Pretty fair opportunity to see a rally on up in there. Don't know what's for me, but INTW might be. Like I might go after it with a 2x long. You can buy some shares right there. You've got risk down to the prior low at 16, so that's a $10 risk. But this would probably break out higher since this basically has been around for the whole pullback. This could pop on up to the 40s. Could be a pretty good opportunity to buy some leverage without going into options right here with INTW. Dollar General, are we done? I would say no. This looks like it still has further downside. Has not even tested the daily roadmap line. This has been down, 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 down. It's kind of funny, when we go into economic uncertainty and tough times for the lower end buyers, Dollar General usually goes pretty good, but this is showing that those lower end buyers were doing pretty good back here, but now they're super stressed and not even really shopping at Dollar General. We're seeing higher end buyers move down to Walmart. Walmart keeps confirming that. And, when do those buyers get tapped out? If they do, we're going to see Walmart pull back like it might already be when we look at it. We might be getting that point. So things are You know, add these to the negative column when we talk about potential for further downside. Add these items to the negative. Like these are canaries, watching Walmart, watching Target, watching Caterpillar, watching John Deere. When you watch those charts, things are kind of getting a little bit economic uncertainty. It's building, but that doesn't mean the market's crashing today. We can still go higher while these charts continue to grind down. These are more macro indicators of where, the tough times that might be building in the market. So don't read too deep into it yet. Royal Caribbean, what we are seeing though is lots of stuff did roadmap bounces that we haven't seen for years. So this could be indicating that we're getting that final little correction before we do the final squeak higher to top it all out. So Costco hadn't been down here in years and years. I mean, it's been a long time, and now we're finally there. Walmart finally there again. It was reliably hitting the roadmap line and then went on this tear last year, came back down now. So Royal Caribbean, been on a pretty good tear. It has hit a few times, did hit in August, but we came back. So we could see this go again. Entirely possible. We get the bounce, break back above that, right there, that high, right around 250, and we could take that on up to 280, 290, to almost 300 right there. That'd be pretty nice on Royal Caribbean. IONX, that is a brand new, 2 days old. They introduce these things all the time. Brand new on IONQ, yeah. Always go to the underlying. That looks like the bubble pattern. Does have a 3-wave down off the high. That low, that high. A little bit of potential for still going lower on IONQ. So I would be very careful on chasing IONX right now. Intel we already hit. CRVO. Will fly. CRVO, my gosh, that looks like a nasty chart. It was hanging out at $2, and then all of a sudden we're popping the last couple of days, and we just popped up to the daily roadmap line. I wouldn't mess with this. It doesn't have. Oh, there it is. There it is. We've got some reverse splits, so that one's a dumpster fire, basically. I wouldn't mess with it. Probably going to go back to $2 after it gets done doing whatever hype we're doing right now. All right, downside stuff. Oh my gosh, holy moly, who would have predicted that Adobe was going down here? Sometimes I get it right. I don't know, everybody. This does have potential, ideal, further downside target at 250. This point that we're at right here does satisfy the minimum requirements to be done with Adobe correction. It would look ideal, like I said, it fits the ideal thing if we continue on down to that 250 area. Doesn't have to. This could bottom, so watch out. Be on reversal lookout. If we start breaking through the daily roadmap line, we could see this reverse strongly right there. All right. In OW, we're in the potential zone for reversing here. We might see a little bit further softness, but we're at the point we're retesting the breakout. This can take us up to quite ridiculous levels like 1250 from 800. That's a pretty nice upside. So looking for that to form a reversal. A lot of these have giant upside opportunity if and when we bounce in the market. It's like I said, it's a target-rich environment when the bounce actually forms. A lot of people want to know about AVGO. It's not on the list today, but this is another one, ripe for a large upside bounce when it actually takes place in the market. So somewhere around this, anywhere from 215 to 225, I do expect that one to bounce into that zone at the minimum. And if we're going to get really bullish, this may take it all the way up to 260 to 269. So for those of you that were in the Great White Shark trade with me, I'm looking for that to at least pop into the 210 area. At least, but we'll see if it actually happens. It doesn't have to happen. Just because somebody put multi-millions of dollars on the trade doesn't mean that they're going to be right, just like the rest of us. So SITM, another potential bounce right here. Move up through the 618 at 220, potential for 285. SAP, that's probably going to actually touch the roadmap line. I know that's the European version. Let's pull up the New York Stock Exchange version. And got a bit further to go to the roadmap line, it looks like. A bit further to go. Load, please. There he goes. Yeah, not a long way, but somewhere around that 245 area would make sense for me if we dipped on down there and touched it. All right, PCAR. It's like Apollo's firing off a bunch of alerts. And potentially breaking out of this little wedge thing, but be careful, this could just be a fake out and we reverse it strongly right there. TSM, we're at support. If we get below this support with, we've made two tails right there that were below my little support line from back here all the way last year. If we get below those two tails, probably coming down here in the low 100 area, 130, 140 area where we dipped back here in August. Kind of crazy. You think about August, which was only like 7, 8 months ago, like we've come all the way up, but we might go revisit. So that's like 100-point correction on TSM. AI hype, right? The hype's coming out of the AI hype's coming out of the market. Boil coming back down quickly. Cold reversing, but not very big. NG1 exclamation point coming back down quickly. I do expect this to revisit the daily roadmap line and possibly go on a trip down lower. This will probably get some sort of bounce before we do, it'll probably do the correction in a three-way fashion. Doesn't have to. We could just get one big correction. We've seen that before. So, Boil, probably, we could watch for that one to hit the roadmap line, which is not far away. Do we get a bounce there? Do we find support? Or does it come on through and come on back down, possibly go lower low? Remember, this big picture is a declining asset similar to UVXY, VXX, things like that, because natural gas does not trend higher over the long term. Maintaining the leverage that Boyle has on natural gas costs a lot of money, and that makes this thing decline over time. Can you play puts on it? Probably not in a reliable way, because the market already knows that it's going to decline. That's why you can't just play a bunch of puts on VXX, you can't just play a bunch of puts on UVXY and make a ton of money, because the market already knows it prices in the downside on those. Market makers already know. All right. Net, potentially bouncing. And we're down to support. Potential to make a bounce at this roadmap line. We look at the high. We look at the low. That sets up an intermediate target at 187 to 195. And then we look at the bigger picture bounce that we're potentially working on. Now we got to watch, because this could be a lower high at this point with that big giant high and that big giant high and the negative reversal off each one. But if we can break that trend line, 250 on the upside, 247, possibly 270 right there. Opportunity, PTIR. Switch to the underlying, PLTR. Still expect the roadmap line. Nothing's changed my mind here. For those of you that are, let me know in the chat if you're surprised that we're actually retracing this deep on PLTR. I mean, anybody surprised? Anybody in here surprised? Nobody's raising their hand. All right. Baba. Yeah, Kimberly told a funny story about her sister last night, but
my kids call my sister Baba, so that's why I'm always like, Baba!
all right. Here we are right here, consolidating between the 1618 and the 1272. We still have that bigger opportunity to pop this on up into that target zone. And I've had this target zone on this chart gosh, so long. It's been up there since we bottomed in October 22. This has taken this long to start getting off the ropes. I've had that target bubble on there. Now, what do I expect to happen when we get there? Not sure. We could go all the way up to that 220 area where the 618 is. We'll probably get some sort of negative reaction. We'll probably come back to the daily roadmap line, wherever it is over here, before we can continue on up and retest the all-time highs at like 300s. So just keep it in mind if you're super bullish on Alibaba that we might experience some tough retraces before we can actually push on up to all-time highs. Sentinel 1. Wow, on a weekly chart, that does not look like an awesome chart. And on the daily chart, it does not look like an awesome chart. So this one might break down and go lower. That's not a strong move up off the lows. The retrace doesn't look done. We might see this down in the single digits below 10. Path. Looking at path, that one tagging the top of the target. Could find a bottom here, but I would definitely want this to prove to me that that's going to hold the bottom before I took any kind of bullish trade on path. I would not just be buying the bottom. That's catching a knife that could go out of business. All right, we're already seeing companies go out of business. Joann's going out of business the last couple of weeks. I mean, we've got other stuff, other rumors, companies potentially going out of business. This is kind of the environment that's ripe for that sort of stuff. TTD. Who would have thought this would have retraced giantly? Whew. Coming back down in the 50s. 30s is really like, if we stay where we are right now for very long, we're probably coming on down to the 20s on this one. Not great. And MDB, still working on getting down to that target. Somewhere around this 80 to 100 area. Still expect that to happen. I've had that on the chart for months and months. Still working our way down there. When we get there, maybe we can hunt for a reversal. I'll probably talk about it 9 gazillion times before we actually, unless we just jump down there on earnings or something. Probably talk about it a whole bunch more times before we actually touch it and build a reversal here. But downtrend of lows is the resistance, and we're still hunting a bottom. That's the list for the day. There's no real bonus trade. The scanner I have didn't find much because, well, the market's kind of lame for looking for higher stuff. Bias for the day, still watching for that 618 to hit. That's what I'm really kind of expecting to happen. I've got an in-person event here today and tomorrow. I'll be back live in front of everybody tomorrow also, but I'll be kind of off Discord as much today, focusing on the people that are here in the room with me. For Term Market Trading Lab members, the link is posted in Discord for the Zoom. We'll be switching over to that here in a few minutes. And otherwise, use Discord. I may not be as active as normal, but the people in the room are here. They'll chat with you. And good luck out there. Be safe. Remember, the account you save may be your own. We'll see you again tomorrow. Bye for now.